Right then, AAVE. Everyone's banging on about it. The king of DeFi lending. But is it still the governor, or has it, lost its bottle? Let's have a proper look.
King? More like an old man with a target on his back, Chris. Every hacker from here to Hong Kong is licking their lips looking at the cash it's holding. Let's not get giddy. This ain't a love-in. This is a SWOT analysis, street style. So let's start with the good stuff before I tear it to shreds. Strengths. Go on.
Easy. It's the top boy, market leader. It's got more money locked in it than the Bank of England.
Wow.
That's called total value locked for anyone who's new to this. It means deep liquidity. You want to borrow a big chunk of crypto? No problem. You want to lend? Sorted. It's a proper functioning market.
Liquidity means nothing if the ship is sinking. What else you got?
Innovation, bruv. Flash loans, they cook that up. Taking out a massive loan with zero collateral, doing your business and paying it back in the same transaction.
Right.
It's some next level stuff. It shows the team behind it have got, massive brains.
Massive brains for other massive brains. Your cousin Kev from Dagenham ain't using a flash loan, is he? It's a niche tool for pro traders. It sounds good in a headline.
Yeah?
But it's not a feature for the masses. It's just noise.
It's not noise, it's a signal of quality. And what about the multi-chain strategy? That's for the masses. You used to have to pay a fortune in gas fees on Ethereum to use it. Now, you can just slide over to Polygon or Arbitrum, and it costs you pennies. They're making it accessible. That's a proper strength.
Or they're spreading themselves too thin. More chains, more bridges, more code.
But
More things to go wrong. You see accessibility. I see a bigger attack surface. Every new chain is another door you've left unlocked.
all right, whatever. I knew you'd say that. Let's get to your favorite part then, Mr. Misery. Let's talk weaknesses. Rip it apart.
Gladly. Weakness number 1, and it's a big one, so-called decentralized governance. It's a joke. A few massive wallets, crypto funds, early investors, they run the show.
Okay.
They have all the voting power. They call it a DAO,
Yeah?
but it's more like a private members club. If they vote to screw over the little guy, they can. Your vote is worthless.
That's a wider DeFi problem though, isn't it? It's not just an AAVE thing.
Don't make excuses for them. It's a fundamental risk. Number 2, it's too damn complicated. Honestly, try and explain to a normal person what AAVE is.
Right.
Their eyes will just glaze over. Liquidity pools, collateralized debt positions. It's a different language. Until your average person can use it without needing a PhD, it's got a hard ceiling on its growth.
Well, it's for investors who do their own work. It's not meant to be as easy as tapping your Monzo card.
Maybe not, but it shouldn't be like trying to solve a Rubik's Cube in the dark either. And that leads to my third point. It's a whales game. Even on the cheaper networks, to make any serious yield, you need serious capital. The protocol is built to serve the rich. It's the same old story of the financial world, just with a crypto skin on it.
See, all your points are valid today, but you're driving by looking in the rearview mirror. You need to look at the opportunities down the road. 2 letters for you, GHO.
Oh, here we go. Another magic internet money stablecoin. Did we all fall asleep and forget what happened to Terra Luna? The crypto graveyard is packed with revolutionary stablecoins that went to zero.
Get a grip. It's not like that. GHO is an over-collateralized stablecoin, more like Maker's DAI.
Okay.
But it's native to AAVE. They can generate it against the assets people have already deposited.
Right.
The protocol earns the interest on the loans. It could become a massive revenue machine.
Could.
The value could be directed back to people who hold and stake the AAVE token. It's a massive opportunity.
Could. The most expensive word in investing. It's all potential. What else is in your box of dreams?
Okay, this is where it gets really interesting. Real-world assets, RWAs. Okay, this is where it gets really interesting. They're building frameworks to allow people to tokenize real-life stuff, a house, a Rolex, a shipping container of goods, and use it as collateral on AAVE.
Wow.
It's the bridge between the multi-trillion-dollar traditional finance world and DeFi. If they crack that, AAVE isn't just a crypto bank, it's a global financial layer.
And the regulatory and legal nightmare for that is on another planet. You think governments are just going to let that happen without sticking their noses in? It's a pipe dream, mate. A beautiful one, but it's years, maybe a decade away from being a smooth reality. You're betting on a miracle.
Fine, you killjoy. Let's talk about the here and now, the stuff that keeps you up at night. Threats. The obvious one is competition.
Correct. Finally, common sense. This is the biggest threat. AAVE is the king, but there are 100 princes waiting to stab it in the back. You've got Compound, Spark, Morpho.
Yeah?
New protocols promising better rates, lower fees, shinier tech. Money in DeFi has zero loyalty. It flows like water to wherever the yield is highest. AAVE's brand will protect it for so long.
By security is its brand. It's audited to hell and back.
And that's threat number 2, the ever-present risk of a hack, smart contract risk, the big one, the one that sends you to zero. They've had their scares. They've had minor exploits on peripheral contracts. It just shows you nothing is ever 100% safe. All it takes is one tiny flaw in millions of lines of code.
Just one.
One mistake, and it's game over. All that TVL, gone, poof.
That's a risk with any protocol though, innit?
Yes, but the bigger they are, the harder they fall. And the biggest threat right now, it's coming from inside the house. The governance civil war, the public arguments between AAVE Labs and the DAO.
Yeah.
There is no other way to put it. It's a shambles. It looks unprofessional and it spooks investors. If the top brass are fighting over the steering wheel,
Right.
you'd be a mug to stay in the passenger seat. That, for me, is the reddest flag of them all.
All right, let's wrap it up then. We've had the good, the bad, and the ugly. After all that, what's the final word from the big short herself? Are you betting against it?
Look, to be clear, shorting AAVE to zero would be madness. It's a DeFi blue chip. It's a core piece of this entire industry. But is it a blind buy and hold right now? No chance. The price is in the toilet compared to its peak. For good reason. The governance mess is a massive problem. The competition is breathing down its neck. For me, it's a wait and see. I want to see if GHO actually works.
Okay.
I want to see them sort out their internal politics. I'm not putting fresh money in until those red flags turn at least amber.
That's fair. I'm a bit more optimistic. I think the market is pricing in too much fear and not enough of the long-term opportunity with RWAs and GHO. I reckon it's a decent accumulation zone for anyone with a long time horizon and a strong stomach. But you're right, it's not going to be a smooth ride.
Exactly. And if you're listening to this and you don't have a strong stomach or you're just gambling,
Yeah?
you're going to get wrecked. You need a plan. So listen up. If you want to join our private group and get me to support you with proper crypto investment and futures trading, contact me on Telegram at Morgan the Big Short. The link is in the description below. Stop guessing and start planning.
And on that note, we're done. Here's a question for you lot to think about. With the internal fighting and fierce competition, can AAVE's brand and innovation keep it at the top? Or are we watching the slow decline of a king? Have a think. We're out.